Hi there, eToro. I'm a day late for my weekly updates. Apologies, but yesterday I had 9 hours of back-to-back meetings. So here we are today. Let's take a look at what moved the market last week. All right, jumping into stats. This is the 1 year chart. There are a lot more lines on the chart today, and I'll tell you why in a moment. So the candles of the S&P 500. So the 12-month return on the S&P 500 is about 33%. Now you can see it's been flat over the last few sessions, more or less. My portfolio has put in a return. My portfolio is the yellow line, put in a return of 45%. And then I've included this dotted line on the charts, which is, this is when last week began. So you can see for these particular ETFs, what the price action has been. So semiconductors have rallied nicely through the past week. TAN, which are the solar stocks, dipped initially going into last week and then had a nice little rally finishing off the week. The UK 100 was up slightly on the week, and Chinese technology stocks also had a bit of a rebound, but continue to be volatile. Regulation just keeps them coming out of the works when it comes to Beijing. Right, if we look at the 1 week, these are stocks that I hold. So over the past week, the worst performer has been Overstock. This is a bit of a head scratcher because they reported earnings were very, very good. But I think that the dump in the stock price might be because of growth concerns in the economy. The stock price is very attractive at these levels, and I'm waiting for confirmation of a bottom before I buy a bit more because it's very, very cheap now. A few other names you can see in here that have done badly. Amazon reported very good earnings looking backwards, but the forecast, they decreased their forecasts for the remainder of the year. Not a huge surprise, but I think that the dip is a good buying opportunity. In fact, I did buy into that dip, and I may continue adding Amazon stock through the next few weeks. Otherwise, it's a fairly mixed bag. So QFIN dropped massively, and I bought it more or less at the bottom of this massive dip for regulatory reasons. Energy company, not so good, such good earnings. Facebook, good earnings, but forecast not so great, etc., etc. So a mixed bag going on there. In terms of the winners, AMD, definitely the winner in the portfolio over the past week or so. We've had to wait a while for this appreciation to happen, but it has happened. We've got a few Chinese names in there, which is a little surprising given the continued crackdown on Chinese equities, but I think that there are just some that are so dirt cheap now that investors are returning. I will talk about that in a moment. Solar stocks are starting to pick up a little bit now too. First Solar, domestic US solar company that will benefit from the friendly attitude that the US government has towards solar companies for the coming years. And then the rest, more or less a mixed bag once again. So AMD, I mentioned, we've been sitting in the stock for a long time. It is one of my favorite semiconductor companies, and it traded in a range for a while until it broke out. I've made many videos about this historically, and this is the way that AMD tends to trade. Even when its value is seemingly obvious, it can trade sideways for a number of months, and then it breaks out to the upside in a big, big way. A stock, another semiconductor that if you look at the fundamentals is fantastic. If you look at recent earnings report is fantastic. If you look at forecasts is fantastic, is Micron. So you can see some of the 2020, trailing 12 months, 2021 estimates, 2022 estimates. Margins are good, companies in good health, but the stock is it's enormously down from the all-time highs earlier this year. This stock dipped on earnings, which were fantastic, off the back of some comments by the CEO. This is another that I think is due a fairly chunky pop, probably above $100 when it does eventually happen. So we have to be patient, but it's a strong company. And I think it is the largest, or maybe the second largest holding that I have right now. Something that is more confusing though are the yields on the 10-year treasuries in the US. So I'm not sure how many of you follow these closely, but when the 10-year yields, so when these candles were approaching these very high levels, they created, not on their own, but they created the sell-off that we saw in tech. This was around February, March kind of time frame. And that's because the bond market hints at certain things going on in the economy. And at this point in time, it was hinting at the fact that the investors in and around US government bonds thought that interest rates were going to rise quickly to offset inflation. That concern cooled off. It lasted for a few months, as we all know, and it's dropped off sharply now. And people are trying to figure out why the hell the yields on the 10-year bond keep on dropping so much. And if you hunt around, you'll see some common messages. I won't go through all of them here. I've highlighted some of them, and if you want to pause the video, you can read through the highlighted passages. But what we're realizing is that no one actually knows what the hell is going on, because the narratives don't fit exactly what is going on at the moment. So the leading theories are that the bond market is saying that there are concerns around growth, upcoming growth, and potentially the Delta variant and renewed lockdowns might be part of this concern. That doesn't make a lot of sense because the picture in the UK is already changing. I know that there's a big Delta variant scare in the US and through Asia at the moment. But the yields seem too low to justify that. And so if I get to the conclusion of this article, it hard justifies ultra-low yields on long-dated treasuries based on fundamentals unless we were headed for a period of dramatically weaker growth that is accompanied by extremely low inflation, an outcome that appears unlikely. So then the question is, what the hell is going on? Is it something that the US government, who holds $5 trillion worth of bonds, is doing in the background that's moving yields? Or is it repositioning that's going on? Is it something that's not fundamental and technical? But right now, I'm not so sure we can use bonds as an indicator of anything obvious going on behind the scenes or any strong opinions amongst the big financial players. Right, earnings have been coming thick and fast. Last week saw a large number of earnings. This article is, it's not very old, it's fairly recent, but it has missed the past few reporting days. So at this point in time, 59% of the companies in the SP 500 reported results. 88% reported EPS above estimates. Now, estimates, quite often, the estimates that are forecast are a little bit lower than what companies and analysts think they might be, because everyone likes a win. It works out better for everyone that way. But anyway, 88% is a lot higher, above the 5-year average of 75%. And if this is the final percentage for the quarter, it'll mark the highest percentage of S&P 500 companies reporting a positive EPS surprise since FactSet, that's this website, began tracking this metric in 2008. Long story short, earnings have been spectacular. Companies are knocking it out of the park. To some degree, this was expected. I think it is a little bit better than what people were expecting. And a lot of analysts and a lot of pundits thought that this, right now, the time that we're in, would be peak growth. And maybe it is, but maybe it continues for another quarter to 2 quarters, especially when you look at the different kinds of sectors involved in the stock market. All right, this chart again, coronavirus in the UK. So lots of people have been watching this very closely. It seems that despite being fully opened up, the number of coronavirus cases in the UK are now dropping off. The number of deaths have been dropping or flat, have not been accelerating, let's put it that way. And the case is similar for the number of patients admitted. This is fantastic news. And now all eyes are on other highly vaccinated countries to see if the same thing plays out. If we jump into this, and I'll just zoom into the last week or so, we can see this was the spike in cases. I think I mentioned last week that I thought we might see one last bump in the numbers because our country fully opened after this peak, and it seems that might have happened, and the numbers still seem to be trending downwards. However, the Delta variant is running rampant in Asian countries, in the US, particularly in the deep south of the US. And so this is affecting sentiment. And it's making a lot of investors concerned that growth is going to be a challenge if this continues and we need to have additional lockdowns. I don't think that's going to happen because the virus spreading seems to be spotty in terms of locations. One area that I'm concerned about is China has issued new lockdowns in certain localities, in some cases locking down millions of people in order to contain the spread of the virus. The numbers aren't very large, but as we know, this virus tends to spread very quickly, so they've been very aggressive in their lockdowns. Now, these lockdowns, because China and Asia tend to be an integral part of supply chains around the world, could obviously have an effect on other companies in other countries for the current period that we're in. But I think lockdowns are good to protect countries and the economies. The last month and the last week or last 2 weeks of last month were very interesting in terms of China. So since September-ish last year, August last year, there's just been bad news after bad news out of China in terms of regulatory crackdowns, and not the most recent anymore, but one of the most recent items being that a number of educational technology companies, edutech companies in China, have been told that they can no longer be for profit for those parts of their syllabus that overlap with the national syllabus. So this means that instantly billions of dollars of worth in these companies were just wiped clean. They disappeared immediately. A few other things have been happening around Didi, for example. There was a rumor that the company was going to go private, and then that rumor was undone. And more recently, this weekend or today, the Chinese regulator is now reviewing gaming companies. So the regulators in Beijing decided to step in and to tell Wall Street, we're not in the business of shutting down our economy and killing our companies. The government spoke to a number of financial groups and said, listen, we're not trying to crush our economy and public companies and private companies, but we are trying to look after our economy and our citizens. Growth. So growth can be measured in a number of ways in various economies, and across some of the world's biggest and wealthiest nations, growth is still firing on all cylinders. In some cases, it's slowing down a little bit, but it's still going strong. This, of course, is driving price inflation in a number of areas. And so while I still expect inflation to be transitory, I think that the high levels that we've seen recently might persist for a little longer than people had thought. Maybe we don't see a single spike over a month or two. Maybe we see it for a quarter or more before it starts coming down back to earth. What about this week? Earnings will continue to be a large part of what we see in the headline through this week and for the next few weeks. As you can see here, there are a lot of companies reporting earnings through this week as well as next week. So expect these to be the things that move the market, along with potentially the Delta news about the Delta variant. This week also has some interesting economic data coming out, so lots of PMI data. Tomorrow, the Bank of England inflation report as well as the interest rate decision will be out on Thursday, and then we have non-farm payrolls and unemployment rate out of the US on Friday. All right, that is it for this week. I hope you have a good week and speak to you next week.